Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Amber Ghaddar, co-founder of AllianceBlock, the first globally compliant decentralized capital market. Amber, it's great to meet with you again. Welcome back to Trade Talks.
Thanks for having me again.
And Amber, you believe that DeFi and TradFi, traditional finance, can complement each other rather than existing as opposing forces. Explain to the audience what you mean by that.
It is indeed, it's not really about competing against one another. It's about collaborating and complementing one another. When you look at the traditional finance space, I can roughly think of at least 3 points where they can benefit from decentralized finance. First, in terms of real-time settlements. Now, we know that the equity markets are quite efficient, and sometimes in terms of cost or speed can be more efficient than blockchain-based products. However, we do have a T+2 settlement that can create issues with margin calls, like the horror story that we've seen with the Robinhood, the GameStop fiasco. This can be solved through DeFi and blockchain. A second point is real-time payment. If you look at the Treasury report of November 2020, when they go into the digital asset section, they do not mention blockchain, they do not mention Ethereum. All they talk about is real-time payment. One thing people tend to forget is that the payment system in the US is quite antiquated and dates back from the 60s, and it takes sometimes 5 days to settle bank transfer. Now, the last one that is quite important is the solidity of the DeFi infrastructure. And the key takeaway of the recent sell-off that we've seen is that the infrastructure is solid. We have seen no firm defaulting, we have seen no need for cash injection, and we have seen no need for a lender of last resort to step in. The market just carried on. On the DeFi side, DeFi can, well, it's an industry that is still in its infancy, and it's a lot of trial and error. What we hope to see is that DeFi will learn, at least from traditional finance, what regulations are and how regulations are applied and why regulations are applied. Sometimes people forget that the financial industry in the US is 3 times more regulated than the healthcare industry. And this didn't start in one day. It's the consequence of multiple crises. It's the consequence of the live and learn. In DeFi, controversially, blockchain is about transparency. However, the crypto market is really not transparent. We need more disclosure of conflict of interest. We need more auditing of protocols. As you know, there've been quite many hacks on a few protocols. And most importantly, we need not more regulatory oversight, but we need more self-regulatory oversight. What amazes me is when you go on trading, on trading platforms, you will see, you will take like a very small test and it will allow you to trade with 100x leverage. If you remember in investment banking, as an analyst, it will take you 3 to 6 months. Plus, you need to take extensive exam with the FCA in the UK, SEC in the US, before you click the trade button. And this is very important for the health of the future of the market structure in DeFi.
And Amber, to your point before, you were mentioning that a lot of the systems that we use date back to the 60s in the US, even other advanced economies such as Western Europe. Same issues as well, right? We're looking at old infrastructure. We're looking at legacy central banks. What are some of the challenges that exist with integration when you have these older systems in place with these newer ones that don't require as much oversight?
So first, I want to highlight a point. For example, in the UK, there is no need for blockchain to interfere in the payment system because we have what we call the faster payment network. And the faster payment network allows for almost real-time settlement. And we didn't need blockchain to do that. Now, just going back on your question, we need better infrastructure, like for institutionals to be able to adopt these kind of products. You need an infrastructure that smells, that tastes, and that feels from an operational perspective the same as what they have. But we also need more liquidity in the system. Right now in DeFi, in my view, liquidity is still not there. It's going to come because remember, for an institutional to adopt a new infrastructure or a new product, it's time consuming and it costs money. And right now, the way the market is, we are still a little bit immature, but we should be there hopefully in the next year or 2 years.
So Amber, when we think about decentralized finance and what it represents, what are the key issues that we have in the industry is KYC, know your customer. Do you think DeFi will appropriately handle those kinds of issues?
Well, we at AllianceBlock are handling these kind of issues. We have a new product that is called the Trustless KYC AML protocol that actually sits on top of our decentralized exchange, and that has been created specifically for institutionals. Now, one of the issues that we have in the industry is that always people are worried that more transparency means less anonymity. But we were able to solve this conundrum with this Trustless KYC AML that basically will greenlit various liquidity pools that complies to the requirement of each institution.
So it sounds like AllianceBlock is really working to bridge the gap between DeFi and traditional finance.
Yes, that is one of the things that we do, because we cater to two types of clients. We cater to fully decentralized clients, but at the same time, we do believe that there's so much potential that is locked in traditional finance that can be brought into decentralized finance, especially with rates being at all-time low and even in negative rates. When you think that some of the products that are offered in the market on USD stablecoin can pay you 5 to 10%, even if you add in a sort of operational risk or security risk or credit risk, it is still quite beneficiary versus traditional products.
All right, Amber, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you for having me, Jill.